Top of the morning to you, John.
Good morning.
I guess we're ready for our final class. Is that possible?
I know it went fast this semester.
Boy, it really did. You guys, I offer my best wishes to you all. You guys did great going through this class so quickly. So,
Yeah, I've never done a class that's this short, so it was
Yeah.
definitely a go class.
I wish you would take it to 240 as well and see if you can nail all three of them at the same time. That would be
Yeah.
something to talk about. Here's Josh. Josh joined us yesterday at the school. Hey, Josh. Give him a second you're muted.
Good morning. Good morning.
Good morning. Did you enjoy the leftovers, Josh?
Oh yeah, I'm
All
still
right,
eating
huh?
the cherries too.
Okay, we were just saying this is the last class of the semester, and
Oh, okay.
congratulations to the entire class for getting through this in just 6 weeks or whatever it was. So with that in mind, let's get going here. This is a chapter I kind of like. It's about the cash flow statement. And it has some rules that are a little complicated at first, but once you get familiar with the rules, it's not such a bad thing. The statement of cash flows. Let's see what we have here. And let me do something here. Hey, how do you like the size of that, huh? Okay. Discuss the usefulness and format of the cash flows, prepare the statement, and use the statement to evaluate a company. Discuss the usefulness and format of the statement of cash flows. The statement of cash flows, to get us started, is an attempt to take the beginning cash balance and subtract the ending cash balance. And that will result in naturally the change in the beginning and the end. And we now want to see how much of that change is due to operations, financing, and investing. So what we're going to do here, we're going to prepare this report. It provides information about the company's ability to generate future cash flows, ability to pay dividends, reasons for the difference between net income and cash flow by operating, cash investing, and financing transactions during the month. So you're going to have three sections. You're going to have operating, investing, and financing. Classification of cash flows. Operating items, those are your normal income statement items, what they're saying here. That's what the company normally does in the course of business. Coca-Cola's business is selling soda. So their operation would be any expenses involved in the distribution of soda pop. They might invest in another company. They might buy some long-term assets, but that's not operating. And financing is simply raising money. So let's see what we have here. Classification, operating activities, the basic things like we just said, from this cash inflows would be the sale of your product and maybe some interest dividends received. Cash outflows could be anything to suppliers, for inventory, for wages, for taxes, interest, etc. Classification of cash flows, changes in investments and long-term assets. Cash inflows investment. If you sell property, plant, and equipment, for example, you bought a company car for your sales manager, and she drove it for like 5 years, and now the car has got 200,000 miles on it, and you decide to sell it, that would be a cash inflow that would go under investing. Or if you bought stock or a bond in another company and sold it, that would be income inflow from an investment, okay? Cash outflows would be to buy those different investments and equipment. And then finally, financing, changes in long-term liabilities and stockholders' equity. Cash inflows, there's only two sources we're going to talk about: from the sale of common stock, the issuance of common stock to the public, and the issuance of debt, meaning bonds and notes. Cash outflows would be if we paid dividends to people who owned our stock, or we redeemed treasury stock. So we have these different types of cash flows with different treatments to get us started here. Significant non-cash activities: the issuance of common stock to purchase assets, conversion of bonds. So there's a lot of non-cash activities that can go on. Refinancing something, exchange of plant assets. These are not going to be on your cash flow statement necessarily, but they're going to be in the financial statements with a note of some kind. Here it is, baby. Here is the cash flow statement. And let's take a quick look at the beginning of it here and see what we can do with it. Hold on here. Let me move this out of my way. There we go. We're always going to start with the operating activities, and we're going to have different details to put in there. And then we're going to come up with the net cash provided by operating. We're going to do the same thing for investing and the same thing for financing. You don't see any numbers in there yet. They're just trying to get us familiar with the template. So you're going to have a subtotal for operating, a subtotal for investing, and a subtotal for financing. When you add those three numbers up, it should and will represent the beginning cash minus the ending cash. And then we're going to make sure that we're going to tie that out, double check it, and we're going to go to the boss with this. And the boss is going to look at the cash flow statement very carefully, as do potential investors or creditors. Classify each of these transactions by type of cash flow activity. Issued stock to the public, financing. You borrowed money, financing. You purchased a semi-trailer, investing. You paid employees, that couldn't be any more than operating. And you perform services, operating. So you're starting to get the idea of the difference between financing, investing, and operating. What we're going to learn in this chapter is called the indirect method. It is the correct method to use. There's another presentation that can be made, but the indirect method is the gap method and the one we're going to be looking at in a few minutes. Three sources of information. In order to do the cash flow statement, you need two balance sheets. You need the balance sheet as of today and the balance sheet as of a month ago, if we're doing it for a month. And then you need the current income statement and maybe some additional information about the details. Steps to prepare a statement of cash flow. Determine net cash provided by operating activities by converting net income from an accrual basis to a cash basis, blah, blah, blah. What they're saying there is we're going to take our net income to begin with, and we're going to adjust it from an accrual basis to a cash basis. So let's see what we have. Step one, step two. Then we're going to look at the changes in the non-current assets and liabilities and record as investing and financing. Compare the net change. We'll get into this in quite detail shortly. Companies favor the indirect method. It's easier, and I wouldn't say it's easier and less costly to prepare, and it focuses on the differences between net income and net cash flow. You've heard us talk a little bit in the last 6 weeks about a company that might be showing tremendous profits, but they have lousy cash flow. Well, you got to be careful of those companies because there's a disconnect there that's going to erupt shortly. Sources to prepare. Look at this. We have an income statement for computer services company. And note that net income is $145,000. Every one of those $145,000 are the result of accrual accounting, the only kind we teach, accrual accounting. we kind of have to turn that back now into a cash basis. Here are the two balance sheets we need. We need the income statement for the current year and the balance sheet for 2022 versus 2021. And notice what they're notating on the far right. They're just showing you that cash increased, accounts receivable decreased, et cetera, et cetera. That's helpful information. That just gets us started just a little bit, okay? We need to know that. Same thing with your current liabilities and everything else. They're showing you what went up, what went down. Okay, well, big deal. That's easy enough. Here's some more information though. Depreciation expense was comprised of $6,000 for building and equipment. The company sold equipment with a book value of $7,000. Cost was $8,000, less accumulated depreciation. They sold this asset for $4,000. They issued bonds. A building costing $120,000 was purchased for cash. Equipment was also purchased. They issued common stock and they paid a dividend. What this is showing you is the information you need to take care of the financing and the investing sections. You have to have direct, specific information about each item, unlike the current assets that we just looked at with this balance sheet here. What is an example of cash flow from operating? Well, I'm looking at this. Let's see. Ta-da. Payment of cash to lenders for interest. Okay. Operating activities. Determine net cash provided or used by operating activities by converting net income from accrual to a cash basis. How do we do it? We're going to take the net income and we're going to add to it the depreciation, amortization, or any depletion. Let me repeat that. Our cash flow, the very first line is going to be the net income. Net income is operation. We're going to add back the depreciation, amortization, or depletion if we have them. We're going to deduct any gains and add losses. These are below the line type things. For example, maybe the gain on a fixed asset or something like that, and on the sale of a fixed asset. And then we're going to look at the changes to the non-cash current assets and current liabilities. This is a lot of words right now, but let's get into the guts of this thing, hopefully. Although depreciation expense reduces net income, it doesn't reduce cash. So we must add it back. So in this simple example, we're saying net income was $145. We add back the $9,000 in depreciation expense, and that'll give us net cash provided by operating activities up until that point anyway. The loss on disposal of an asset. Any loss is added to the net income and any gain is subtracted. So let's see if they give us a demonstration. Yeah, here we go. We had the $145,000 net income. We add the depreciation expense and you subtract losses and add gains. Why are we doing that? Because that $3,000 loss is included in the $145,000 net income. That $3,000 should not be shown in net income. So we're going to have to add it back to get our cash net income number set up. So we have net income of 145. If we didn't have the depreciation expense, we'd have a profit of 154. If we didn't have that loss, we'd have a profit of 157, okay? One of the first rules we need to understand. When accounts, now let's talk about this a little bit. Changes to accounts receivable. When accounts receivable balance decrease, cash receipts are higher than revenue earned. Amount of decrease in cash accounts receivable is added to net income. Let me talk about this, and I think it'll make it a little more clear as we roll along. Any increase in a current asset is an unfavorable cash flow. That is a hard and fast rule you need to know. Any increase in a current liability is an unfavorable cash flow. Any decrease in a cash asset, in a current asset, is a favorable cash flow. And accounts receivable is the perfect account to demonstrate it. Accounts receivable, when we sell something to somebody, that asset, accounts receivable, goes up, but we haven't been paid yet. So cash flow wise, that's as unfavorable as you can imagine. Accounts receivable has gone up, but nobody's paid us. Now we receive, in this case, that 517,000, that reduces the asset, and that's a favorable activity. Same thing with inventory. When you buy inventory, unfavorable cash flow. When you sell the inventory, favorable cash flow. So that's the rule you have to understand, that if a current asset increases, it is unfavorable. If it decreases, it's favorable. So let's see here. We've got 145,000, and we went over that depreciation expense and the loss on the sale of the plant asset. Accounts receivable went down by $10,000. I love how these examples sometimes have these terrible mistakes. Here they're showing 20,000. Oh no, it did go down by 10. My bad. Forgive me, Wally. I spoke too soon. Net income 145, depreciation expense 9, the loss, and there you go. The decrease is 10. So that takes our operating cash flow to 167. Inventory, the same thing. Inventory. If inventory went up, which it did here, it went up by 5,000, right? Beginning was 10, ending is 15. That will be added. That will be, oh, it went up. And so you subtract it. See how easy it is to get mixed up if you go too quickly? In this case, the inventory went up. So that's unfavorable. And it goes in as a minus. It has an unfavorable impact on cash flow. Same thing with prepaid expense, which is another current asset. They're telling you that prepaid expenses increased. So that goes in as a minus. So there's your net cash provided by operating activities, okay? $158,000. So these rules are a little tricky to get your handle on, but once you do, it should go through pretty smoothly. The key thing is understanding the template. You start with your operating activities and you continue through the investing and financing. Current liabilities, they have the opposite impact on the assets. So if a current liability goes up, that's good. If a liability goes up, it's good because we got something for free. If a liability goes down, it's unfavorable because we paid it. At least with liabilities, you don't have to worry about increase, decrease. If it went up, it's unfavorable. It went up, it's favorable. So here we go. We're continuing with operations. Increase in accounts payable. That's great. That's great. When we buy something on credit, on account, when we receive those goods, we've gotten something for free. So that's a favorable cash flow impact. If it was the other way where we're paying, that's no good. Decrease in accounts payable 2,000. So now what they're saying is that 172,000 is the net cash provided by operating activities. Net income provided by operating activities. Now they're talking about non-cash charges. This here is a good little slide to look at. It's telling you what to do with the depreciation expense and the amortization and the gains and losses. These are the non-cash types of things, non-cash. The changes in assets and current liabilities, those are the rules right there, okay? So you've got 1, 2, 3, 4, 5, 6, 7, 8 things, and just memorize them. Get the feel of them. I don't want you to memorize them, just understand them so you can apply them as needed. More cash from operating. John's Photo Plus had net income of 73,000. It includes depreciation expense and a gain on disposal. John's comparative balance sheets show the following. So what's the net cash provided by operating? Well, we always start with net income. We know we add the depreciation, and we know we subtract the gain. So the answer would be 80 minus 2, be 77,500 if we did that. Making some sense, John, so far?
Yes, it is.
Yeah, it's a tricky little chapter here. Okay, we'll just continue along. Cash from operating activities. Calculate net cash. We started with 73, and then here are the adjustments, and these are the things we just put in. Net cash provided by operating activities, $69,700. That, to me, is the hard part of the cash flow statement. The next two sections, you're going to be given some of the information where you just pluck it out and drop it into the template. Investing and financing, okay? Here we have land, 110,000, and a bond payable, 110. Well, the 110,000, that is going to be a cash outflow. We purchased land for 110, and here we borrowed money for 110. So this is an investing cash flow, and this is a financing cash flow. Here we go. Non-cash, issuance of bonds to purchase the land, $110,000. From the additional information, the company acquired an office building. Well, we're just going to pluck that 120 right out of the general ledger. There's the 120. Cash flow is negative. And let's see what else they give us. The equipment increase, okay. They're showing you that the equipment increased and there was a sale of equipment. The equipment increase resulted from two transactions. They purchased equipment for 25 and they sold an $8,000 piece of equipment. I'm sorry, a 4,000 piece of equipment for 8,000. So they're showing it right down here. 120, the purchase of the building, 25,000 for this purchase of equipment, and 4,000 positive for the sale of the equipment. And that's the end of investing. Financing, you issue stock and you pay dividends. You issue stock and you pay dividends, or you borrow money. So let's see. They issued $20,000 worth of stock. There it is right there, common stock. They pay dividends of 29. They're telling you that here. You pull that right out of retained earnings. And that gives you $9,000. And that's the entire cash flow statement, except for the analysis of it, okay? For example, we have now come up with the fact that this company has 172,000 in positive cash flow or favorable cash flow. It has negative cash flow because it invested in a few things for the investing category, and for financing activities, they have 9,000 unfavorable, if you will. So the cash at the beginning of the period was $33,000. At the end of the period, it was 55. difference of 22. Now you're going to sit down with your boss and go through the cash flow statement. And the first thing the boss is going to look at, he's going to see the gain of $22,000. Okay. And he's going to say, wait a minute, how come we only had a gain of how come we only picked up 22,000 in cash when we had $172,000 worth of operating income? And you're gonna have to say, whoa, boss, hey, don't forget now. Remember, we bought that equipment. Remember, we bought the building. That took it down. Then he'll say, oh yeah, you're right. And the same thing with the stock. You point out that we had 9,000 impact unfavorably, if you will, due to the issuance of the stock and the payment of the dividends. Compare the net change in cash on the statement of cash flows. Hold on 1 second here. Get a little, I think I have a little bit of a virus here. Okay. Net change in cash, indirect. What they're just showing you here are the differences. Again, these are the increases, decreases. Okay. What we did was go through how to prepare the statement of cash flow. I know it's tricky. And on the exam, you're going to get a lot of questions along this line. They'll say net income was 100,000, depreciation was 9,000, and accounts payable went up 9,000. What is the operating activity? And you have to be smart enough to know you take the 100,000, you add the depreciation, and you add any increase in a liability. So be prepared for questions where you'll get 3 or 4 items of cash flow information, and you have to come up with the cash flow. Excuse me. Ugh, that's good stuff. Let's evaluate a company now. Corporate life cycle. Here's a metric. This will be on the test with absolute certainty. Free cash flow. Net cash provided by operating activities minus capital expenditures minus cash dividends. Well, this company, say, has $1 million in cash, but they know they want to spend $200,000 on a building in a year or so. And they know they must continue to pay dividends. They want to pay the dividends to attract investment. So the net cash that we're going to call free cash flow is going to be operating activities minus capital spending minus cash dividends. So that's a metric to understand. Free cash flow. If the free cash flow was, say, $75,000 in this example, that's money that the company can do whatever they choose to do with it, okay? Information to calculate free cash flow. Here we go. Cash flow provided by operating activity. And they're giving you some different things here. So the cash flow provided by operating are the expenditures on property, plant, and equipment, and the dividends paid. You subtract that out. And here they're showing you right here, additions to 12,451, and the dividends here, the 12,769. Okay, that should make some sense, huh? You've got, the company has X amount of cash, but they don't want to spend a certain amount because they're holding it for 2 specific reasons. Let's look at the direct method quickly. You shouldn't get questions on the direct method. When I was in the workforce all those years, I have to make a confession at Thomas & Betts, where I worked, I used the direct method without even realizing it. But we were a fairly small operation, and it wasn't like we had 50 pages of detail in our cash account. We had maybe 1.5 pages every month. So I could pick and choose. The direct method, what you do is what you do is, want to do this as simply as possible. They're not showing me what I want. Okay. What I was hoping they would present, and they don't do it. The direct method, you just open up your general ledger and you see the beginning balance. And then you see a whole list of debits in that T account that we know is the general ledger. And you see a whole list of credits. Well, you would mark each one individually as operating or investing, and then just add them up. Kind of a clunky way to do it. If it's a bigger company, you can't do it that way. It would be, too much time preparing something. But that's the direct method. You're just plucking it right out of the general ledger. And with that, our lesson is over. I'll take comments from the students here. Josh, what do you think?
Honestly, it sounds pretty straightforward, but
Good.
I thought last chapter was kind of straightforward, and as I was doing the assignments, I was a little lost.
Okay, we're challenging you, huh, Josh?
Yeah, that last chapter got me. But quick question on this chapter.
Yeah.
I saw that you skipped over. There's a formula for cash receipts from customers. Is that for direct method that we don't need to worry about?
Cash receipts from customers will, you don't have to worry about that. Absolutely. Okay. Yes, that's detail. That's the direct method. When you go in and you identify that this particular credit to this particular debit to cash was a cash receipt from a customer.
Okay.
With the method we're doing and what's going to be on the test, Joshua, we're concerned with the differences in the beginning and the ending balances of those operating activities. We're not interested in the detail at this point.
Okay.
The boss might come to you later and say, why did accounts receivable fall so much? And you say that, well, it's good news, right, boss? The accounts receivable went way down because we collected like crazy. Hopefully that's the reason why, and not that people stop buying your product, if you know what I mean. So,
and right. Then that's kind of reflecting from the part of this chapter where it was if a current asset increases, then it's unfavorable, and if it decreases, it's favorable.
Yes, that's the only memorization you need, or if you don't want to memorize it, understand it. If a current asset goes up, it's because we spent money. That's the only way a current asset goes up. So that's unfavorable. If it goes down, we got the benefit of that asset. Accounts receivable, good example, went up. That is unfavorable because we gave away our product without getting a penny for it. But then when we do get paid, that's a positive cash flow and thus a reduction in the current asset. Okay.
So the favorable and unfavorable only pertains to what happens to the actual cash.
Yes.
Right. Okay.
Yes. If cash went up, it's good. Cash went down. Woody Allen, who I used to love, had a funny little joke about college. He said the one class they don't teach in business is a class that should be called Money and Why It Is Good. And that's kind of what we're doing here. We're just trying to figure out what happened to it, the ups and downs. Okay. What do you think, John?
I think it makes sense. It was interesting because I worked for a company that had been acquired, and obviously the amount of cash we had left was really light. And so they brought us all in and were having us plan to how to increase the cash flow. Yeah. So for example, they had our program managers going out and trying to reduce the accounts payable to bring in the cash for prior sales.
Yep.
And then they were having them go to their suppliers and negotiate terms that would make the accounts payable grow.
Yeah.
So that
the accounts receivable, but go ahead.
Yeah. So they were basically harvesting account receivables and trying to grow the accounts payable.
Yeah.
So it's to get more cash on the books or in the bank account.
Interesting. That's the company that not transferred me, but the job I took 23 years ago when I first moved to Santa Barbara. my job was to get the receivables down to 30 days and pay in 90 days. And that's
Yep.
not easy to do. So yeah, that's what companies do. They
Yeah, that was
make
exactly what they did. They were trying to get quick collections and slow payments. And then
Yep.
they obviously were not investing in capital that year because even though
Right.
depreciation might be spread out, the
Yeah.
cash went away the moment you bought the item.
Yeah. Did the company thrive after that, or what happened?
Oh yeah, yeah. They're a big Fortune 500 company, so they did very well.
Oh, okay. That's great. All
And
right.
then
Go ahead, John.
just something to pass on if it's okay with you. When I did the homework, there were if you go to slide 49, it was very confusing on the homework.
Slide 49.
Yeah. So on the homework, they inserted an extra row right above where you see depreciation expense, and they were having you fill it in. And what I didn't realize in the homework until after doing it multiple times was they were having you finish the line that's above it, that they were scrolling it across.
Yeah.
So, Joshua, like that long line there is important to see that it goes way out there because they're having you fill it in between there.
Okay.
Yeah.
Yeah. Kind of a clunky presentation, huh?
Yeah, it was because I was trying to figure out why there was a subtotal above depreciation expense when there's a subtotal at the bottom. And then I finally realized it was just the trying to have you fill out the line. So
Yeah.
I struggled for about 15 minutes on the homework trying to figure out what to do.
Yeah, that's a shame with the wasting time like that. Yeah, the 145, you might have yeah, I can't explain that, why I would set that up like that. But
Yeah.
Wiley has its reasons. They're pretty wily like that. All right. Hey, well, Josh, it was great working with you and John. You know where to find me if you want to come in for tutoring at any time. And John, you're taking 240 next semester. Am I right with that?
Yeah, I'm planning to, yes.
Yeah, even though I'm not teaching that subject, I'm heavily involved in it. I'll be involved quite a lot in terms of grading papers and maybe a couple of presentations in place of Cornelia. I have a stupid question for you guys. Are we on campus next semester?
The 240 had a in-person and a online.
I think, yeah.
Oh,
I think
really?
I saw that.
Yeah. The reason I ask, I think I'm the in-person guy then. I might be the in-person guy for 240, but we'll see. I'm not quite sure. All right. Well, I'll let you guys go, and I guess we're good for 110 today, right, John?
Yeah, no need to meet. Thank you.
Okay. Hey, you take care, everybody.
All right, Bob, I have some questions on the
Sure.
last chapter's homework.
Yeah. You want to share a screen with me?
Yeah, let me see if I can pull that up.
Okay, I'm going to sign off. You all have a great day.
You
Take
too,
care,
stay safe,
John.
John.
Bye-bye.
All right, let me
me set you up
pull
there.
the-
Hold on. I have to hook you up. Whoops. You're sharing, not me. Oops. I muted you by mistake, John. Could you fix that? Joshua.
There you go.
Thank you.
All right, let me pull up the homework
Okay, now you
assignment.
can do it.
Right. Yeah, and quick question to get the total paid in capital, you have to just multiply your outstanding shares by the cost in the market, right?
No, that gives you the common stock. Here, let me explain that. That's a question all the students ask. Paid in capital is simply the amount of money you took in beyond the par value of the stock. So you issued $1 par stock to the public, and they paid $10 for it. So you got $10. You debit cash for 10, and you credit common stock just for the par value. The remaining $9 credit's called paid in capital in excess of par.
Okay. Yeah. So that means it's you add both of those, correct?
Yep, and you add those two up, and that's your $10. Yep.
Okay. Yeah, because on the homework or on the, I think it was the pre-lecture assignment.
Uh-huh.
It had me fill in only the common stock. Like it had given it was the pre-lecture. Let me see if I can. Well, on the pre-lecture assignment, it had to put paid in capital, and
Yep.
I kept calculating exactly how you said, so I multiplied it by the par, and then I added the additional paid in capital, and it wasn't going through. And then finally, on the last chance, I just put the total common stock that they had there already, and that answer was correct.
But you can't necessarily do it like that because they kind of gave it to you. But go back up to the top again to that entry, if you would, Josh. Okay, that's February 1st, right? They issued
Yeah.
6,500 shares of common stock, right?
Mhm.
What's the par value of the stock? $4 a share, right?
Yeah.
So 4 times 6,500 is what? 20. I can't
I think it
do that in
was.
my head. So you go down there. Yeah, $26,000. So you debit cash for the 39, the common stock for the 4, and the other one for the difference.
Mhm. So yeah, so I understood these because they were kind of straightforward. And then I
Okay.
had and then the dividends paid on preferred stock. I memorized the equation already, so that one's easy. The
Okay.
one I had trouble with was this one. The December 1st
Yep.
declared a 50-cent per share cash dividend to common stockholders. I kept trying to figure out the calculations and I couldn't get it right. Also so we'll just stay with that one. So I got it wrong all 3 times, and then I went to the correct answers,
Mhm.
and then it gave me um this number here. And I didn't know how they found it. But because like when I clicked it,
Do they give you a solution where they show you the calculations?
you see, it didn't have it when I had finally submitted it.
Okay.
But I think if I was to go to my answers, it gives me the solution. Yeah, there you
Okay.
go. I didn't see it when I was doing it, but
Yeah.
see they have here.
Okay. You have 1,000,003 in cash dividends. Number of shares. Okay. Common stock. 65,000. Hold on. I just want to look at this here real quick. Yeah, on October 1st, that had to be preferred stock when they're multiplying it by a percentage. The 27.3. Cash dividends, 325 plus 6,500 and 1,300. Okay, so just go back to the top. And go down a little bit so I can see the problem. Declared a $50 per share. Go back up a little bit so I can see the number of shares. Yeah, see, they have 390,000 shares authorized, right?
Yeah.
But what did they do? They issued another 6,500.
So they added. So they basically got authorized an additional 65.
Yeah, yeah.
So
They had 300. No, wait a minute. Authorized 390. That's authorized. Yeah, I feel your pain here. I don't quite get it myself.
yeah, because so I'm not sure if again because I'm using my phone as the calculator, so the numbers may have gotten messed up, but I tried calculating it a whole bunch and I never got that.
Oh, here we go. Here we go, Josh. I think I got it now. 1,000,003 is the total common stock, right? At that point, you divide it by 4 to get the number of shares issued.
And that was.
So take 1,000,003, divide it by 4.
Let me get the calculator. I'm gonna go get batteries for my other calculator later on today for sure.
Make sure you have them when you take the test.
No, yeah, yeah. That's like I'm gonna prepare a week before. So it's 1,300,000 divided by 4, and it was 325,000.
So write that number down somewhere.
Uh-huh. And then so
Is that,
I got
could you check your arithmetic one more time?
Yeah.
390,000. I'm sorry. 1,000,003 divided by 4. I think you did it right, but I got screwed up, but
yeah.
humor.
So I got that. And then after that, I added the
6,500,
65.
right? And then they bought 1,300 in treasury stock. Okay.
So then I
But
would
that shouldn't have
subtract that.
anything, that shouldn't have anything to do with the dividend. So once you go down to the
Right.
solution again. Yeah, see it? 325 plus 6,500
see-
minus 6.
They include the treasury. So I understand what they're doing here. Like they're subtracting the treasury stock,
Right.
but it's like what I understood from this up here was that these are two separate things.
Yeah,
So as
treasury.
in,
Yep.
yeah, so as in like the 325,000 common stock, they were already issued, like they're outstanding basically.
That's
And
what they are.
And on top of that, from these 390,000 authorized, there
Yep.
was 65,000 of
Yep.
those in their treasury stock.
Yes.
That's how I understood it.
Okay, I see it now. So they had treasury stock of 6,500 shares, and then they bought 1,300 more. Okay, now it's starting to make sense. So go back down to the solution. Yeah, this was a real tricky one they gave you.
And then what they did was they added the treasury stock
And
they
subtracted.
subtracted it from what was already outstanding.
You know what confused me? The fact that they issued 6,500 and they used 6,500 again for the treasury stock.
Yeah.
But do you understand that the treasury stock, you don't pay dividends on treasury stock. You don't pay dividends to yourself.
Yeah, so I understood that, but what I wasn't understanding, like at least the way, because you know how I told you that basically my English, I guess the way the words and the questions are structured, it throws me off a bit. But you see, my understanding when I looked at this was that these treasury stocks were being purchased from already the authorized.
Yes, that's absolutely correct.
And so that's why I didn't think that I was gonna subtract treasury stock from outstanding common stock. But that's what they did here.
Yep.
And
you're absolutely right.
And that's basically how they got that. And I was like, well, the way it's worded, I mean, I didn't understand it. But is it safe to assume, like for here, for example, when they mention treasury stock with common stock, that whatever is outstanding in the common stock, we're to say that those outstanding stocks also include treasury stock?
No. The outstanding shares of common stock do not include treasury stock.
No, well, as in like it's included as a negative balance. So as in like how, because how I understood this is there's 325,000 outstanding common stock.
Right.
But based off of what the question is like saying here, if we were to ignore the adjustments for what we did, which was basically the 1,300 and the 6,500.
Yep.
This is still saying that from the outstanding, you got to still subtract an additional 6,500, which was in the treasury, in order to then pay out the dividends.
Yeah, I follow you, but that's not correct. And here's where we're missing the boat, I think, with me here. The 325, that's what they had at the beginning of the year, right?
Yeah,
Okay, then they brought in another 6,500, okay? Those are your outstanding shares at that, go back to the solution. They had 325 to begin with, then they brought in 6,500, okay?
mhm.
But before they issued the dividend, they brought in treasury stock in terms of 6,513. So the outstanding shares at one point were 331,500. Now those shares are being reduced because they bought them back from the secondary market.
Okay. Yeah,
Okay.
that makes,
Yeah, what you
Yeah.
were saying was quite right until you made a little turn there at the end. The outstanding shares are independent of the treasury shares. If you have
Alright.
1,000 outstanding and then they bought 50 back treasury, now you only have 950 outstanding.
Okay. Yeah, see, because basically the confusing part for me was that, like, if you were to give me a list of stuff, I'm assuming this is already like, it's been like, this is how much is there, this is how much we have.
Yep. Yep.
But
Yep.
that's why I'm saying, so if they are like if we get another question like this and they include treasury stock like this, is it safe to assume that, because it's saying that the outstanding, it's everything that's been sold.
Yes.
So when they have treasury stock, we just subtract from whatever's been sold. So
That's
right
right.
here,
You're
how we got that
you're,
number.
yeah, treasury stock has the impact of reducing the outstanding shares.
Okay.
And that's one reason companies buy treasury stock, because they want to make the earnings per share look bigger.
Okay.
They might attract more investment.
All right. And then I also had a question on the same homework. I kept putting income. I typed in income for this one, and the only stuff that I never got income summary. So
I don't, I would not worry about that one. I've
Okay.
never, as far as I know, we don't go into the the other comprehensive income.
well, the answer was income summary. So like
Income
these are the
summary.
income summary.
Yeah.
But I would type in income, and this
Okay.
never came out for me.
Yeah, go back up again, if you would, please. Let's look at your income statement.
Where's the income statement?
Oh, they didn't give me an income statement, did they?
No, this is all they gave us. But then they did say here that the net income for the year was 365.
Oh, well, okay. They gave you pay the dividend. Yeah, go down to the solution one more time. For some reason, they're just, I really don't understand that.
Yeah, I mean, I didn't know how they wanted me to get it, because I'm telling you, I typed in income and income summary didn't come out for me. And I was like,
No.
well, I'm just gonna guess. And I just kept guessing, kept getting it wrong. I put in the income, like I understood the
Yeah.
putting in the numbers right, but I didn't understand this. And I was like, you know what? I'm gonna just get it wrong.
What they're doing, what they didn't tell you, they were looking for the closing entry, for Pete's sake. That's your closing entry.
Okay. So
I
instead
don't,
of, it might be worded as in what's the closing entry?
yeah,
for-
remember you're saying that there's once in a while you see a word that shakes you up. That's what this is doing here. Determine net income for the year was 365. There's nothing there that tells me you needed to write the closing entry,
Yeah.
and that's all that thing is.
Okay.
And
So
why?
I mean,
Yeah,
I'll just keep a mental note on
Yeah.
that one, just in
Yeah.
case if it comes up on the
Yeah.
test.
This will be an interesting test. You got a couple of tough chapters, huh?
Yeah. No, this last night, again, I mean, I'm gonna study even extra harder this time, because I felt confident with the last one and the
Yep.
time got me. So that's why now
Excellent.
I'm asking questions.
Yeah.
And this one for the preferred stock and common stock, it's always a credit account, basically,
Yes.
right?
Yes. They have credit balances. Yeah.
Okay. Yeah, I got it wrong the first time and I moved it over,
Yeah.
and I just wanted
Well,
to
they're all equity
clarify.
accounts. Remember? Yeah.
Right. Okay. And then I had the same issue with these.
Yep,
Well, these no, I had these correct because basically on the homework right here, we had it on the credit side.
yeah,
So I was like, okay. And then I think the retained earnings, I had to do some sort of calculation. No, we had the retained earnings already. I
yeah.
think there are some sort of calculations to be made for that one, but
Well, yeah, the retained earn, yeah, but you didn't have to do it. They gave it to you.
yeah, I understood that one. And then we came down to that one I did
Oh,
pretty easy. That I understood this one, the
good.
whole balance sheet. I memorized this one too, basically how everything comes in order.
Oh, yeah.
I didn't understand this one, the earnings per share.
Okay, well, that's
And
pretty easy.
so
It's the earnings divided by the outstanding shares. So the earnings were 365, right? Your net income?
okay. So it'd
And,
be
right.
oh, so I was getting this one wrong because I didn't know because I had gotten this question wrong with the common stock for the outstanding shares and the dividends.
Okay, we'll go back
I
up to the beginning there. Okay. You had, remember you divided the 390 by 4,
mhm,
and what number did you get when you did that again?
325,000.
325,000. Yeah, 325,000. That was the outstanding shares before these transactions, but they issued another 6,500, right?
Mhm.
So add that to the 325,000, and then they bought treasury shares at 1,300. Now you have to subtract that.
Yeah,
So three. I forget what your number was, but when the 325, whatever that was, plus 6,500 minus 13. And if we look at the solution, it should say that. I mean, we just try to do the math right here.
1,300.
Your outstanding shares are one fourth of the 1,300 plus 6,500 minus 1,300.
Okay. So
And then whatever that number is, you divide it into 365.
divided by 36500. And
The other way
then
around, 365,000 divided by.
oh okay. 36500 divided by that number. Then I get 1.21275.
Ugh. Okay.
And then let's see the solution. 365 minus 27.
What was the 27,300 earnings?
And then we got to get the average.
Oh, technically that's right. But yeah, technically it's right. It's the first time I've seen a textbook present it that way, though. Yeah, technically you're supposed to be the average throughout the year. But for our purposes, Josh, we will just give you the outstanding shares.
Okay.
You won't have to worry about doing an average.
Okay.
So those two questions are a bit of an outlier. But earnings per share, that makes sense, right?
Yeah.
You had an income of 300. Let's say what we know the number now. We had income of 337,700. And when we divided it out by the outstanding shares, the company earned $1.05 for every share outstanding. That means that's $1.05. Maybe they're going to give you in the form of a dividend, or maybe not.
This 27,300. Where did they get that one from?
That's what I'm thinking too. Go back up on top.
27.
I'm glad I don't have to do all this homework.
I don't even see that number. 27. They got it from
Oh, they pay dividends.
October 1st.
Well, there is, yeah.
So they only got it from the preferred stock dividends.
The preferred, You subtract, okay. Yeah, what, I gotta give Wiley credit. They're really teaching this correctly. Let me take a deep breath. When you do the earnings per share, you subtract out the preferred stock. You should take out the preferred stock dividends. And there's a reason for that. So your formula, if you want to write this down, is outstanding shares equals the average beginning and ending minus the preferred shares. Except on the test, you won't have to do an average. You're just going to say, we have 1 million outstanding shares. Minus anything involved with the preferred stock.
And it's only connected to the preferred stock then?
Yes.
Not common stock?
Right.
Okay.
Right. Because if the company makes more money, the preferred people don't make a penny at all. The only thing the preferred people are going to get is the percentage, 7% or whatever it was. It's like a bond. If the stock goes through the roof and the company's making billions and billions of dollars, the preferred people will not benefit 1 penny from that because they only get that dividend. It's the common people who will reap the big rewards, if you will.
Okay.
The common stock, big risk, big reward. Preferred stock, very conservative. I want a preferred stock and I want a steady income stream. I mean, I'm in my mid-70s and even I feel like I'm too young for preferred stock. I have a little bit of adventure left in me,
I believe so too. And then the return on common stockholders' equity. Again, I didn't know that I had the formula for that one, but I didn't know how to find the average. Because I mean, we solved for this year's right here, total stockholders' equity. So, but even then, that number's not even here.
Okay, we'll go back up. Let's have some fun with this. Yeah, keep going up toward the top there. We'll start off with the givens. Now on this one here, I think they wanted you to do a lot of arithmetic. They don't give you the total here. You got your calculator handy?
Yep.
Let's add these numbers up. Add them up except for the treasury stock, which you're going to decrease. 390 plus the 1,000,003. Let me do it on my phone too.
And then we subtract treasury.
Yeah. And that should be your beginning equity balance.
I got 3,175,900.
Okay, go back down. Let's compare it to the number there.
They got like 2 million or something.
Right.
Oh no, that's right here.
Subtract the 2,766,000.
Minus.
Oh no, they're giving it to us right over here, Josh. Here it is. In the lower left-hand corner.
Oh no, this is part of the solution. So this is what we were given here for this
right,
question.
But you were asking me how they came up with the outstanding.
How
they came up with the beginning and ending equity. Here it is here. They added the 13 plus 624. 894 is your retained earnings. I know that. And then to get the ending, you'd have to do a lot of arithmetic to put this together.
And then we got 1,036,000. This was the new outstanding.
Yep.
Stock. And then
That's the paid in capital.
Okay. And
And
then
that's the
this
new
number-
retained earnings.
Okay. And then we subtract treasury.
That's a tough question. That question could very easily be on the CPA exam.
Okay. Let me see. Which number did they omit from here then? No, because they got these two numbers added. They left out preferred stock.
Yes. That was my
Okay.
mistake when I told you to add that in.
Okay. So when doing stockholders equity, return on stockholders equity for the bottom average,
Mhm.
we leave out preferred stock because it's safe to assume that the preferred stock is on top,
Right.
right? So no need to have it in the, I'm just trying to make like, little mental tricks so I can remember this equation a little bit better. But
Yeah, this is a tough little
Yeah.
nut here.
yeah, these were the two that I got confused. And then like I'm telling you on the let me see, I'll pull up so this makes more sense now. I'll just go ahead and review it again before the exam. But I'll show you for the I think the assignment, the attitude, the pre-lecture, I mean. Let
Go
me
for
see. There's chapter 11. I believe it was the second one that I didn't do 100%. Then your assignment. I think, is it this one? Is it one stock?
But those are all good.
Yeah. This one had me a little troubled for a bit too. I had to use all my three. I exhausted my three tries on this one for sure.
Okay.
I couldn't get the exact paid in capital, but after I, bulldozed through it, I was able to do it. Let me see if it is this next one. I think.
Yeah, I gotta give Wiley credit where it's due. These are good, tough questions, but they're fair.
No, this one was straightforward. I think it was the first assignment, the first pre-lecture assignment. Let's see. Let's see. Cause like yeah, I understood how to calculate the pre-lec on the paid in capital, but on one of the questions, it had like just the common stock there, and I was like, I'm adding everything. I'm adding the the other additional paid in capital, and I
Yeah,
wasn't getting the
yeah.
number right.
Yeah.
All right, let me see. I think. Let me see. Is it this one? No. Short. No.
Wow,
I don't know where it
25
went.
questions.
I don't know where that problem went, but there is one where it was asking to calculate the paid in capital, and I was adding everything, and I was like, this isn't adding up because it was giving me the wrong answer.
Yeah.
And then I just put the common stock that they gave me, which was not including the additional.
Yeah.
And it turned out to be that's what they wanted as paid in capital.
Okay, now that's a bad way to present it. Technically, the common stock is paid in capital, technically. But when we say paid in capital, we're really supposed to be talking about the paid in capital in excess of par. That's why it has that modifier at the end, in excess of par.
Sure, 10%.
Nobody in the real world would call common stock paid in capital. Nobody. Although
Right.
technically it is.
So it's just basically how they word one of those things again of how they
Yeah.
worded it. That
Exactly. I would have gotten that one wrong too.
I think. Yeah, see, this one I had trouble figuring out the paid in capital. So I
Yeah.
was doing all those calculations, and then finally I ended up getting it right. But I don't know where that one is. It might be. I think it was this one. Basically, solving for the paid in capital for this one. Because I mean, I exhausted my 3 tries on this one. So
Yeah,
I'm thinking it was this one. So
yeah, I can
Uh,
see that.
um so if you can, how would we find the paid in capital for just like this beginning?
Well, when you see paid in capital without the modifier in excess of par, it means the common stock too, and the preferred stock.
Oh yeah, see, yeah, this one's here. Look, paid in capital, and then here common stock.
Yeah,
So that's the one I just plugged in because I was like, paid in capital
yeah.
for
Well, that was,
me.
yeah, they gave you a couple numbers here.
Yeah. So I was like, I don't know, because then I was adding, I forgot what I was doing. Yeah, because I was like, common stock was this, but then I'm assuming this was sold at their par value, which was I assumed it was gonna be $6. Yeah, there you go.
Uh-huh.
That's what I was doing because it said here the 2-to-1 split, which would reduce it half par.
Yeah,
So I was assuming it was $6. And then I was saying that, well, this is like outstanding shares were
yeah.
whatever, then it was going to be times 6, which was going to equal this. And then these extra, what was it, 8, 9, 10, $12 were going to be the additional paid in capital, which I would add to the paid in capital here.
Yeah,
So
that's, let me just point one thing out. Go down a little bit so I can see where. Oh, they didn't put the par value. A stock split, let me make it easy for us. Remember, a stock split, you don't do anything.
yeah. No, yeah. So I understand that. So I was able to get the outstanding shares. I was able to understand how to like do this, and I knew I had the chart of like how everything was affected, but
Yeah.
I wasn't able to get the paid in capital because the calculations I was doing was this plus the additional that I
Oh, no,
was,
no, no.
self
No,
trying to find.
the paid in capital has nothing to do with the $18.
Okay.
The paid in capital is whatever it was at that point in time.
Okay. So
The
then it's just like,
$18, the reason they gave you the market price is to do the stock dividend.
okay. Yeah, that's what I had used it for. Okay, yeah, because I was just assuming like, okay, so this is common stock, but based off of what I know, it's like there's common stock, and then you have your additional paid in capital for the common stock. So I
Right.
was trying to find, that's why I thought they gave this 18 in
Yeah.
like, so I can add the additional to
No,
this.
the only reason they gave you the 18 is you're going to take 97,000 shares times 6% times $18. That should be your stock dividend.
Okay. Yeah, this one, I was trying. I was like, I'm
It's a
based
tough
off
one.
of, yeah, I was like, based off of what I'm reading on my notes is you gotta add the additional, and that's why
Yeah.
I was trying to solve for the additional. And
Yeah.
then finally on the last try, I was like, well, I haven't just tried plugging in that. And then I
Yep.
plugged it in and I did the same with that original. I found this paid in capital, and then I ended up getting the question right. And I was like, let me double check to make sure that like I know how to calculate paid in capital.
Now you're doing good. You're thinking your way through these things nicely.
Yeah. No, I mean, struggling through these does help me clarify it,
Yeah.
but I wanted to ask these questions to make sure that like
Yeah.
I'm not just, submitting the homework just because I guessed and got it right sort of way.
Yeah. Yeah.
So yeah.
Cornelia
yeah.
may ask me to record a review. So we'll see. That you might get some help there.
Okay. Perfect. Yeah, no, I'm thinking of logging in on Sunday either way. So I can I'm gonna make a list of questions just so I can make sure I
Yeah, well, yeah, I'll be glad to, yeah, that's right. Yeah, we'll work together, Sunday if you like, and Tuesday. I mean, you have until the end of next week, right, to do the exam?
yeah. Yeah,
Okay,
it's until Saturday.
yeah,
But
okay, so you got what? Four, three more,
whole-
sessions
yeah.
to help you out.
Yeah, I'm gonna utilize all three because I'm trying
No,
to kick this midterms butt.
yeah. By the way, who do you like in the women's game Sunday in England?
Well, I don't remember I mentioned I don't watch sports.
Ah,
Yeah, and I'm not caught up with that.
it's the European Championship. Germany is playing England in England, and Cornelia is a big soccer fan.
Well,
So
Germany might win. They're really tall, no?
they what?
The Germany team, as far as I know, like even in the men's team, the Germany team, they tend to be taller, no?
Yeah, they're good, but England is a slight favorite. It should be a pretty good match, as they call it in soccer. We
Yeah,
shall
no,
see.
I stopped watching sports after. Well, I was in a frat, and all we would do is like we'd meet up for Sunday football and watch all these sports, but it was
Yeah.
just excuses to drink. And I no longer drink, so
Yeah.
basically I was like, it's just going to a rowdy
Yeah.
house, and I stopped watching sports then, and I was like,
Yeah, I recall those days myself. Not much
Yeah.
has changed. So,
Uh,
all right, Josh, well, good working with you, man.
all right, thank you for helping me out and clarifying these questions I had.
All
Helped a
right,
lot.
and hope to see you Sunday evening.
Yes, I'll be there.
All right, take care, man.
Stay
Bye-bye.
safe.
Boof.